Good afternoon, this is Brad Dennis with BIS Commodities and giving you a wrap-up of last week's trade. That would have been end of September into beginning of October. Last week we had new news coming out of the USDA on quarterly stocks, and the real surprise there was that they did lower the quarterly stocks in beans down to 92 million bushels, which is the lowest that it's ever been, whereas they raised quarterly stocks for corn, citing last quarter feed usage wasn't as great. So beans we found less than, corn we found more of. By the end of the week we had beans somewhat higher right now. We still were trading into a range all of last week, and that was, November was $9 to $9.30 or so. And we have yet to break out of that range for any reason until we got to today's numbers. Today we came in and we saw a lot of short covering. Funds were in, buying up beans, they were buying up corn. Getting into a less risky of position for the Friday USDA supply and demand report. That's going to be what we're looking at for this week. People paring back positions, getting ready for Friday's results. Now, I think that most people feel that this coming Friday, which would be, October 10th, that we're going to see higher yields out there. The real question is, though, how are they going to use the FSA data and how are they going to reduce the acres? And that has some people fearful that we might see some reduced stock numbers. So last week, kind of a neutral trade. We didn't about a nickel here or there in corn and beans. This week we've started off strong. Beans leading the charge higher, corn following up. And on Friday, we'll determine if the low was put in last week in both these corn and beans. And what I'd be looking at is in Friday's data, do we have our quarterly stocks, or excuse me, not our quarterly stocks, but our ending stocks in beans? Are they over 475 or are they under that? With the changes that the government makes. 2 billion is the line in the sand for the corn. When you start seeing the government reducing that ending stocks number, you tend to see some investment come back into this thing. Now, right now, I don't see that investment coming in. I see it as just short covering, but it is setting up that if they want to put some money to work, they could do it that way. Now, the thing you have to keep in mind, though, too, is why would they be buying it? Is it a commodity play or is it a pure price play on the product? We'll get into that a little bit later. The good to excellent ratings today should be about the same, so these higher ratings, a lot of people are expecting the higher yields in both corn and beans. U.S. weather, not really a factor anymore. Growing season is just about done. This weekend, I believe, or this coming weekend, you're going to have some pretty cold temps in Michigan, possibly dipping into Minnesota too, but the growing season is basically over with, so attention is actually going to go down to South America. We're going to watch that weather scenario there. Now, if you looked at the markets today, Monday the 6th, you would have seen coffee take off and be up about $13, and that's due to dryness in the coffee areas of Brazil. Now, some people are trying to translate that over into drier areas for the soybean areas in Brazil, but you got to remember geographically where these areas are, and remember that you're talking about a rainforest down there. Typically, you find some monsoons coming in the beginning of October. They have not arrived yet, but I don't think that it's anything to panic about on the weather side for beans down in South America. Cattle market. Briefly on the cattle market. Last week you had futures gain $6-7 on the board, whereas you were up maybe 50 cents in the boxes. So the board or the futures were really trying to drag up that that cash price, and we really didn't see any cattle trade until very late on Friday, and it came in around 162, 163, but it was lightly traded, meaning the negotiated trade was very light. We're seeing a lot of contract cattle being called in, and that just kind of emphasizes that the packer doesn't want to pay up this. Now, when they run out of their contract cattle, that's when they have to go to the open market and really bid things up. We'll just have to see if higher box prices coincides with the packer having to execute more negotiated sales. Today we did see boxes in the morning up about $2, but we didn't see the futures react at all, and actually saw feeders close lower for the day. Another factor this week is going to be cattle on feed report. It's going to come out on Friday. Expectations are right around placements, I believe, around 100.6%, or excuse me, on feed at 100.6%, placements at 107%. So that's kind of factoring in when you look at that April-June spread. That's what they're looking at out there. In the equity markets on Friday, we saw unemployment results. Saw unemployment dip below 6% right before a November election, and we saw the non-farm payrolls jump up to 248,000. You look at what that did, that just maybe reassures us that this dollar rally is going to continue, and that's the thing that you got to look at too. When you're looking at money coming into the commodity sector, usually that happens when our dollar is dropping, not when a dollar is rallying. And we've rallied to a four-year high. So when we're looking at the corn and beans and maybe some bottom picking going on down there, you're still not seeing the sizable investment that you could see if that dollar was in duress. And it's not. It's very solid. People expect the ECB, European Central Bank, to start incorporating some quantitative easing out there. If that happens, that's only going to strengthen the dollar more. So you look at two different directions with these central banks. You're looking at the European Central Bank. Hey, we've got to get more liquidity out there. We've got to add stuff to the system. Whereas the U.S. Or the Federal Reserve is taking the stimulus out. Actually, the Bank of England is also looking at ratcheting up rates possibly too. So different directions out there, and that just calls for a higher dollar. Now, it's kind of a tough area to be in when you do have that higher dollar, because all of a sudden our exports, what we're exporting out, becomes much more expensive. So there's a fine balance that you got to find out there, but it seems to me like the dollar has a little bit further to go, and that's going to kind of weigh on these commodities. And you also have to recognize too that it's already weighed on the crude oil market. So I mean, when you've got a $90 crude, that doesn't help ethanol prices soar up there either. So I look at today's day with corn being up 8 cents or so and beans being up 30. Probably selling opportunities right now until we know more, and we won't know more until after Friday's report. So that's kind of a wrap up of what we saw last week, kind of what we're looking forward to this week, and we'll go from there. If you have any questions, give us a call here at BIS Commodities, 1-800-373-2525, or check us out on the web, www.biscommodities.com.